I think the time is right, and the asset is right, and the people that we have involved with this company is right, and what that all adds up to is an opportunity that probably only comes around once in a person's career.
The gold market has been absolutely decimated in the last several years. Although not an optimal scenario for the companies in question, for investors searching for real value, this has created incredible opportunities. One of the most promising ones that I've come across is Sabina Gold and Silver, a company that 4 years ago had $1 billion market value that today is about $75 million.
Hey, Bruce. Nice to see you.
Bruce McLeod, a mining engineer and Sabina's CEO, is a focused man. He's a member of the legendary McLeod mining family.
You go in a coffee shop in the morning and that's what they talk about, the price of gold. And
his father, Don, helped develop one of the world's most prolific gold districts at BC's Golden Triangle, so it's little wonder Bruce chose a career in mining.
Are you in it because your dad was in it?
I'd imagine so. I've lived with it since I've been old enough to talk and old enough to listen.
Today, Bruce is sitting on a potentially world-class gold find. Sabina's Back River project in Nunavut, northern Canada, already hosts over 5 million ounces of gold at 6 grams per ton with potential to grow. In layman's terms, there's a lot of high-grade gold in the ground. But cutting through investor malaise and finding the capital to build a gold mine in the north isn't easy, even when you think you might have a sure thing. Bruce recently invited me to his North Vancouver office to talk about the opportunity he believes Sabina represents. And our conversation began with a bit of a history lesson all gold investors will find useful, especially in today's market.
I remember it quite specifically. I was at the PDA, and that was the year that Briex's core shack burnt down. And shortly thereafter, my father decided to retire. And he felt that that was going to deal a significant blow to the capital markets, and that would be a decade before it was fully repaired. Of course, I was young, I was naive. I felt that there was far too much capital, too many great projects, and he was right and I was wrong. But from my perspective, from a learning perspective, is what happened is I went from operations into being in control of some junior exploration companies in a time when there was no capital, and much like today. And so I cut my teeth in an environment where capital wasn't there, where you had to make more out of less. You couldn't rely on equity markets that were willing to fund any project. You had to have a special project. And what I ended up doing is I inherited 3 effectively broke exploration companies. And those 3 companies ended up being merged and sold. The first ended up being Stornoway Diamonds, which today is developing the Renard. We did the takeover of Ashton Mining of Canada. I worked with Ira Thomas and my sister Catherine during that, and again, very successful. The other, Tanajon, ended up merging with Creston and the El Creston molybdenum deposit and being taken over by Mercator. And the third was a company called Troon Resources that we did, the first non-resource deal, and we certainly thought that was the bottom of the market, and it turned into Grenville Strategic Royalties, which today is paying a dividend. And from that, I was able to lever into some other ideas, and the biggest one of those was a company called Sherwood Copper. And many of the people that I'm working with today at Sabina were involved in that. Is Tony Walsh, who was the CEO of Miramar. The asset really came out of a Miramar concept. And David Fennell, who was a director at the time, who is again on our board today. And Sherwood, we ended up being taken over by Capstone, and the Minto mine in the Yukon, again in an Arctic environment. We ended up building that ourselves and being taken over by Capstone, and it's still a going concern today.
Explain the mentality of gold miners over the last 4 years and why you think it sets the stage well for a company like Sabina.
What's happening in the gold business right now is the project pipeline's drying up. Those projects that are ready to be the next shovel-ready producers, there's very few of them. There's a lot of mines that are in their final years, in their last quartile of production, and what happens with those, costs go up, grades go down. So there hasn't been a good replenishment for those mid-tiers and majors of those assets. And we are nearing a pinch point right now that those kind of assets that are high quality, high grade, are going to be much higher value in the short to medium term than they were certainly in the last 4 or 5 years.
How do you create wealth in the mining business? And can you talk to me a bit about the shocking cyclicality of this sector? Because I don't think most people understand how mining goes from such a have-not to have-not space. And
there was a quote that was made by Ian Telfer at the Denver Gold Show that was in print, and what it was is when the market changes, when equity comes into the mining business, it's like trying to pour a bottle of scotch into a glass. You know, it overflows. There's too much. But we're quite the opposite today, and I think looking at market cycles, they all look the same at the bottom. You know, things like will trade at deep discounts, trade at $10 to $20 an ounce in the ground.
if they trade at all.
If they trade, again, I guess trading is a bit of a misnomer. They're valued at $5 to $20 an ounce in the ground. But at the top of the market, those quality assets all look the same. They trade at $100 or $120 an ounce. So if you look at the extreme multiples between the bottom of the market and the top, it's really the money is made at the bottom of the cycle, and you can do a lot better job in distinguishing between the quality assets at the bottom and the quality management teams, because really it's about the people that have the skill sets to be able to negotiate through feasibility, through permitting, through construction, through operations. And there's very few companies out there that actually have those skill sets, that their management has been through all of those and been successful. And I think Sabina is one of those companies that truly has the people that have shown they've been able to be successful in all of those specific areas.
So why are you attracted? Like, what's the opportunity with Sabina?
Well, I think there's several opportunities, because as one of the CEOs of one of the major companies said when asked about M&A, and he answered saying, we would only be interested in assets that are greater than 5 million ounces, that are high grade and in safe jurisdictions. And we think there's only, and I'm square bracketing, 10 of those that are already owned by their competition, 10 of those in the world. Sabina is one of those. It is greater than 5 million ounces. The grade is, these are the highest grade undeveloped open pits in North America. And in terms of feasibility, it's now complete. In terms of permitting, it's very far down the path. We've been in the permitting pipeline since 2012. And it is one of those projects that will be shovel ready in the next cycle.
Review the feasibility studies for me. You've published 2 this summer, and what do they illustrate, do you think?
I came on as CEO in February of this year, and there was a feasibility that was largely complete. It was a quality feasibility. I think we've got a great team at Sabina. The engineers that we used, again, lots of experience in Arctic environments. The issue was it was a big capital cost. Now, it showed at $1,200 an ounce, a very good rate of return compared to most projects, but the issue was capital cost. And what we did is we recast that feasibility. We were very open that even though it was valid from a capital perspective, it'd be very difficult in this environment, and looked at it rather from an NPV, a net present value perspective. We looked at it from internal rate of return. How much return do I get on my cash investment? And what we did was we took that project and recast it into something that was smaller, 3,000 tons a day rather than 6, something that was higher grade, something that was less risk, more open pit, less working places, and we're able to show a significant increase in the internal rate of return using a lower gold price. In this feasibility, which we've just put out, we used $1,150 gold, and we're able to show a 24.2% after-tax rate of return. And I don't think there's another feasibility out there, that uses 1150, and if you did in their sensitivity tables use 1150, that shows the kind of rate of return that Sabina's Back River deposit does.
And the smaller project that isn't casting aside the potential of a bigger mine, or?
We're calling it the initial project, quite simply because we see it as the initial way to generate production and generate cash flow from the Back River belt.
Okay, so you're about a $70 million market cap today, less the cash. So maybe 55 million enterprise value, roughly. And I understand there's a little over 400 million in capital required to build the initial project. So how do you anticipate paying for a mine like this in this market?
Well, I think that is the question I get asked the most. I think the feasibility is a quality enough document that people can work through the metrics. We benchmarked against other operating costs, against other projects that are in similar areas. It's really how do you finance without diluting the shareholders. Sabina's Back River deposit is one of the few quality deposits that are undeveloped that are in the domain, particularly in safe jurisdictions. And I said, the highest grade undeveloped open pits in North America. What we have to do is we have to get people to recognize the underlying value of these assets, and we have to fix the equity price. And really, when you take a look at the peers that we're compared against, we trade at a significant discount. And the reason is what I like to call the ratchet effect, is the price of gold goes down $50 and an equity goes down 20 cents. If the price of that gold goes back up $50, you don't see that 20% gain. And what's happened with Sabina is, it was a big story. It was the best performing exploration stock on the TSX in 2011. And what's happened is the generalist funds that fled, the selling from the ETFs, the selling from the indexes that held Sabina has really pushed that ratchet effect to an extreme. And what ended with is in December of 2014, when we came out of the last index, there was 40 million shares of selling of Sabina in one day. And what's happened is it's created an artificial price that, again, when you look at the companies that are at our stage with our grades, at our stage of permitting, is we trade at a discount to the ones that we're compared directly against by most of the analysts that cover us. So really, I think it is showing people that it is a quality asset, having people out there do their own due diligence, looking at the details of this feasibility, and realizing that even though permitting is a long process in Canada, that we're 75% through that process.
When will you need to potentially finance CapEx and make a construction decision?
We're in a unique situation that we have enough cash that I don't think we would make that decision until we started seeing some improvements in the equity markets. And we have some modest capital requirements that we think we could advance the project in 2016 and 2017. If you couldn't raise the capital to build it, I still think there's accretive programs that we can do to convert inferred resources, to do some additional trade-off and optimization studies, some of the grassroots exploration that we feel that we've been able to deliver on. We can last 2 to 3 years in a market like this, still advancing the project, not just putting it on hold. So, and we hope certainly in the next short to medium term that funding will be a much easier process than it is today.
What's your vision, your most bullish vision for Sabina over the next 5 years?
I think the time is right, and the asset is right, and the people that we have involved with this company is right, and what that all adds up to is an opportunity that probably only comes around once in a person's career.
So what do you mean the timing's right?
When everybody's paying attention, the generalist funds are buying, people are giving those high, lofty valuations to gold companies, that's when it's most difficult to build these projects. Today, quality people that have done it before, the quality engineers, the construction managers, the tradespeople, the welders, the electricians, they're available today. And the people that can actually execute and deliver a project on time and budget are available today. And this is when you want to be building a project. And what's going to happen is one day people are going to wake up and say, I think I should look at the gold space. What's out there? And when the generalist investors start looking and asking themselves that question, I think a Sabina is going to stand out to them. And that is when I think that we'll shine.
How do you be effective as the CEO of this company?
Well, I think ultimately for Sabina to be successful is we believe that the people that are intimate with this project believe that it's a best-in-class asset. What we have to do today is we have to separate ourselves from many of those peers. We've delivered the feasibility. We're in the final stages of permitting, and I think now we have to show to the investing public what an opportunity we have in front of us and what we think the ultimate value of that opportunity could be. I just came back from 2 conferences in Denver. I think that we had a very good reception. We've got a number of follow-up meetings from those, and I think between now and the end of this year, both our investor relations team and myself are going to be very busy in making sure that we ultimately show people what the potential of Sabina is and can convince them that this really is an asset that comes along, once in an investing lifetime.
Are you sure you're not going to just sit and wait for the market to come around? Like, how are you going to get people into the story? What are you going to do about it?
There's $380 million been spent on this project, and it's quality dollars. And we traded a fraction of that today. I think what we have to do is we have to show people what the value proposition is. And the value proposition is we have a company today that trades at $6 an ounce in the ground. In a market that is normalized, that's a $50 ounce in the ground. In a market that is at the final end of a bull market, that's $100 to $120 an ounce. These are profitable ounces today at $1,150 US an ounce. There are very few assets in the world that have this quality of a deposit. And I think what my job is today is to make sure that that story is in the public domain.
Last word on Sabina, Bruce?
It's a unique opportunity. The asset, the jurisdiction, the grade of this asset, the de-risking that's already taken place, and trading at a value today that only happens in the bottom of a bear market, I think all adds up to a fantastic opportunity for our shareholders.